Alright, hello, and this is going to be a very short and brief trade review. It's been a while since I actually had the time to actually do a trade review, and it's been 8 or 9 months since I had my last review posted here, and sometimes the market can be crazy, and sometimes you need to take a break, and sometimes you just gotta relearn and relearn, and sometimes it looks as if it's not working, but believe you me, those little progress, those little steps you take every day actually amounts to something good. So today I'm talking about USDJPY. I'm just going to be straightforward, not really doing too much, and I am going to have three screens on, and we're going to be having USDJPY on with the lipsticks with the chart analysis, and we're going to be having USDJPY with just a bare plain chart so that I can actually explain why I took a couple of trades today, what I saw, what I actually anticipated, and how the market actually went in my expected direction and favor. First of all, whatsoever is being recorded on this video doesn't necessarily mean you should go and practice it on your own. Take whatever knowledge you can get from here and try to apply it on a demo account. I repeat, on a demo account, backtest and study, and past performance does not determine future performance. And please, whatsoever risks and loss that you might experience, I will not be held responsible. This is just for education purposes. And let's dive right into it. So this is USDJPY. I have two separate charts here, and one on the left is where the lipsticks, the analysis, and everything are, and the one on the right is where just the plain charts, just to explain. So first of all, on the right hand, we can see that USDJPY has been ranging, consolidating, and this is where many of us, or many of you newbies, or many of those of us, I say us because I'm still coming up. I've just been training for 2 years, two something years. Then again, I am still trying my best to learn as much as I can. So diving right into it. So this is USDJPY. On the right hand side, we have price actually consolidating. So we've been consolidating for a very long time, and on USDJPY I actually had the intention of buying at a certain price point before all this consolidation happened, before all this um, movement happened. Actually had the intention of buying at a specific price point, at a price point whereby I think 147, somewhere about here, 146 7 something. That was where I had the intentions of buying. So I think it should be somewhere 146, 146 for something. That was where I had my intentions of buying at. But when the opportunity came for me to buy, it started accumulating, started going up and down, started doing all this back and forth move. I couldn't really understand why my target was here and all this consolidation was happening here. I didn't really understand it. I was like, okay, maybe it was gonna go up. Then all of a sudden, I see this strong spike down. Well, I want to take advantage of everyday narrative of everyday buyers, and whatsoever the day offers me, that is what I trade. So when the market was like throughout last week, it was accumulating, and many of us who haven't really traded accumulated market or a ranging market would be cooked, would be lost, would be frustrated, Well, I would not really dive much into what I did during this time because I sold this, I bought this, I sold this, I bought this, I sold this, I got stopped at a few times. I'm not gonna lie, got stopped at a few more times. Um, but overall, I was able to profit from this whole accumulation move. But my main focus was that what is the narrative, what is the story behind what was happening. So I looked at the market and I was like, okay, so I have my targets. Now I'm telling you what my mind was telling me. I have my targets here. I would like to see price go to that high. That is my target. That is my target. But I understand that I trade three assets. I trade USDJPY, I trade GBPJPY, and I trade the Nasdaq. Now, when it comes to the Nasdaq, I know that the market is going to go one way, one way. It doesn't really have time doing. When it comes to the Nasdaq, one way, one way. It just moves. If it's going to consolidate, it's just going to do a little bit for a couple of days. But when it comes to the currency pair, it can do consolidation for a week, a month, and you will end up losing focus or losing hindsight of where you expected to go, and you might do something else, and then you get frustrated of the move, and then you be like, fuck, I thought this was, I actually had this planned out. So I'm used to this kind of things when it comes to the currency pair markets, and I trade USDJPY and GBPJPY because I resonate with them. I find them much more attractive to me more than GBP other response. But do what works for you. But one thing about the currency pair market is that you can be stuck in a range for days, for weeks, or months. But the thing is, never lose focus of where you think the market is likely going to draw to. Now, regardless of any strategy you're using, for me, I'm an ICT trader. I use smart money concepts, and most of you may be using support and resistance, might be using supply and demand, whatever strategy. Just don't lose focus of where you think the market is likely going to draw to. Okay, so looking at USDJPY, I actually expected, or I wanted, or I needed my bias or every other trader's bias to be wrong for me to enter my position. Now, what do I mean by that? When you look at this market, you see a high. Believe me, I'm not very good at all these higher highs, higher lows. You see a high. I think this is a low, a higher low. Then you see another higher high, and then you see a higher low, and then you see a higher high. Now, everybody expects what should happen, another higher low. Okay, so this is, let's say, this low. And what do you think everybody was expecting another higher high. But if you trade strategy, if you trade my strategy, if you trade ICT concept, you understand that we're trading and struggling inside this down close candle, right here, which is a breaker. This one in red, which is a bearish breaker. Now, price hasn't or did not go above this breaker. Okay, so when price started trading inside the breaker, came to the lower portion. When I mean by lower portion of the breaker, I'm talking about this part. Okay, came to the lower portion of the breaker, came to the upper portion of the breaker. When I mean by upper portion of the breaker, I mean this part. Okay, so whenever I use a breaker, I use the lower portion and upper portion. Okay, sometimes I don't really care about the middle portion, but the upper portion and the lower portion, that's where I'm mostly focused on. And the most sensitive part is the upper portion. The reason is because most traders see this place as resistance. So let me get this in thick. Now this thick, let's put this orange. Okay, now let's put this in blue. Now that thick blue line, most traders will see that as resistance. So what do they expect? They expect it that the resistance come up into this level, comes down. Okay, comes back, retests the resistance, still comes down. Okay, now everybody who sees this as a double top would have their stop loss above these two equal highs. Okay, so the market comes back again, stops them out. Now closing above it with like 34 candles, and the literal logical imperative of everybody is that when price closes above a range 34 candles, then you look for another. It is a change. You look for a retest. So most traders will be like, okay, it has broken, it retests and is about to go higher. But no, the market starts sinking down, creating a low for people to get in for to go long, and then it gaps up, opening the week, gaps up, opening the week. Now, traders who are long position here, expecting this to make another high, therefore printing a trending market like this, having a trending market like this. Now, this is what I envision. This is what I think whenever I like maybe I want to trade, because I always like to think about how retails would think and how smart monies would think. So most traders would like to see like, okay, this should create a new high, the price goes up and started driving down. Now anybody, if you know what a position box is, would have their entry here and will have their stop loss on the most low, because they're expecting that the market is trending and then they want to target it. So the resting liquidity would be um would be somewhere, would be here. And if you zoom in clearly, one rule, one trading ICT concept is that relatively equal lows, double top, double bottom, are targets of liquidity. So you have sell side liquidity, buy side liquidity. So with this relatively equal lows here, and where people are actually going to put their stuff, because retails, they see this level as, let's say, a demand zone. Okay, so they would have their stop losses below 146,562. That is the blue line. Okay, so when price comes down, stops them out. Now when it stops them out, it will close strongly below that line. Okay, so let's get rid of all this. Now we're actually I'm actually printing my story of what I did before I took the trade. So I'm going to show you the trade, but let's keep going. So now when price stops them out, now most traders would think that, all right, so this trend has actually shifted from an uptrend to back to a downtrend. So the next narrative or the next thinking would be to see it come back, retests, and like probably starts crashing to the ground. That is not what I'm thinking. Now, initially last week or a week before last week, I had my intentions of buying when price came below this low, 146,626. That was my narrative. When price came to below that price point, I wanted to buy there. So I had my buy position here. I had my buy position here, and then I rode it all to this high. And then I was expecting that price should like, okay, just go one way. So I had few of my positions in, and then price came back, stopped me at that break even, which was fine, which is okay. So I started seeing, okay, price came back up, stopped me at a break even around here, went back up. I was like, okay, fine, that's cool. Wow, my bias needs to shift. I started selling. So when I sold it, I attacked these two lows right here. So I attacked those two lows, and then I sold, then I bought again, and I sold. Note, I said that whenever price went below this 146,626, I always wanted to find a buying position. So when I looked closely and I was like, all right, so why has price printed two equal lows here? What is it doing? So it bought again. Note the upper portion of the breaker, which I measured earlier, I sold down, closed out early, and then the wick gapped up, came down. So this level, this one in the green box, that was my target, my drawn liquidity, because I know that when the trend shifts, that is where I want to be entering. So my entry was based off on when 146,562 was taken. That is this green line here, so which is sell side liquidity. When it taps there, when it drops down, I wanted to enter. Now another thing again is that I would not just enter when price is taking out that low. Now that low has another level of liquidity, because anybody who would have bought it here, anybody who would have, let's say, anybody who would have bought it around 146.626. That is, let's say, I don't want to hide this yet. I don't want to get us crowded with too much. Anybody who would have bought it here would have their stop loss somewhere, not on the low, but somewhere close, and a swing low or a very insignificant, not visible, relatively equal lows is a form of liquidity for me. So when I was planning to buy below this green box, I was like, okay, where is the real level of liquidity running? So drop down to a lower time frame, like a 15-minute or a 5-minute chart. So I want to buy below this low. But where would the stops be resting? The stops for retail perspectives will be resting on a low and below, at a low and below relatively equal lows. Okay, so and coming below this low and just weaken it a little bit doesn't necessarily mean that is it. So you scroll to the left and then I see this these two relatively equal lows that looks like triple top of or four bottom, sorry, triple bottom. So that in itself is where, okay, I know that anybody who would have bought it here, would have bought it on this green box area, would have their stop loss protected at a double bottom. So my target was, while my target was buy it below this level for a much cheaper price, I waited for it to come below this level because this is so equal, so perfect, and the market doesn't really like perfect, it likes to make it jagged. So when it came below that, that is when I entered. So when it wicked and then dropped down, that was when I entered 146.420. I didn't enter really perfect. I couldn't predict where exact price points because I'm not a god. So I had to dollar cost average into the trade gradually. So when the trade came there, it expanded and I got a good trade. So now I'm going to show you the trade and then we're going to dive onto this second part of the chart. So I'm going to get rid of this and I am going to close this in, and then I am going to show you the trade, and I'm going to show you like on the MT5, which I actually screenshotted on my good funded account. So this is my good funded account, and where is the trade? This is the screenshot of the trade. So this is the trade, and this is the trade. Now you can clearly see this trade that my margin was 4998 and I was just $2 into loss gradually. It was a good one. So I had 0.6, which I earlier said I dollar cost average down this year into the trade, and it was not really a bad position because I actually calculated that my risk, and if the trade had gone against me, which my stop loss was, I don't really want to show this. I do not want to show this here. So we're going to talk about this. My stop loss was at the last low. Okay, my stop loss was at the last low. Now this was where my stop loss was at. My stop loss, let me get this into a higher time frame. My stop loss was very, very small. Okay, my stop loss was at this low because I know that if it had come there and stopped me out, then I know that my whole narrative, my whole bias to see it go up here would be wrong. So I had a very small stop loss. So this is the trade here. One I closed out because time was running out. Like I don't want to allow the market to open the next day and then whatever retracement you want to do. This is currency pairs. If it's Nasdaq, I'm comfortable with leaving the market till the next day, but this is currency pairs. So I had a trade, I bought it, so I'm going to show you. So this is the trade, so you can actually see my position and you can actually see where my stop loss were. So you can actually see where my stop loss here. I actually entered 0.2 because I wasn't really sure. Let me show you again. So this is 0.2, 0.4, 0.6, 0.6. So you see 0.2, 0.4, 0.6, 0.6. So in total I had about one 0.1 something lots on the trade. So this was the trade, and you can clearly see how dollar cost average. I went in 0.02 at first, it went down while I had my stop loss there, then I went in again 0.06, it went down again, and then I entered 0.04. Now remember, I had actually prepared that okay, this is the total loss I'm going to use and this is the total risk, but I wasn't sure on where I was going to enter, so I had to dollar cost average down. So 0.02, 0.06, 0.04, and 0.06. So 0.06 and 0.04 makes it 0.1, I think. Yes, 0.1. So 0.1 and 0.18. So 0.18, that is the total loss. So that was how the trade moved very beautifully. You can actually see that it came down, retraced into where my 0.02 was, 146.542. That was like an optimal trade entry for the trade to like retrace when it was New York session. So this is a screenshot of it hitting my TP, and this is another screenshot again when the trade was like 1 hour. So you can actually see this is a screen recording of the trade, and you can actually see that good for the trade, and this is a $1,000 live account of the trade. I took the trade on two different accounts, so I didn't really, for my consistency score rule, I had to close the $1,000 account. So that was a trade on two different accounts. So on a daily chart, this was the trade. So this is the trade on a daily chart. Beautiful trade, and I don't really have to struggle that much because the narrative which I explained to you guys earlier, that was it. So this is just screenshots of the trade, and that was it. So now let's dive on to our previous charts. Now for the main charts, we have, for the main chart, the main deal of the day, I think, yes, this the main deal of the day. This is my main chart. Now ignore that that position box, that's not supposed to be there. Now you can see my main chart where I actually expected the price to go, and you can see that this chart is more neat per se. So you can see 146.55568, and let me make it now thick, that thick black line, and you can see where my entry is and you can see where my stop is. Simple trade, nothing here. So now most people ask me, why did I enter there? Why did I not take it like from the supply, I mean demand zone, let's say around here, like people took it? Now rule number one, whenever something looks too perfect, too easy, it's a mishap. Rule number two, whenever there's an equal low, equal highs, that's the target. Rule number three, there is whenever there is a trade idea and you expect it to buy or sell from somewhere, take your eyes down or up. If you're looking to sell, take your eyes up a little bit. And last rule I use is think outside the box, think outside what other people might be doing, and do something contrary. Now would the trade had gone my way, 50-50? Would it have hit my stop loss, 50-50? I do not know, but I have waited and I've prepared and I've experienced enough to know that okay, so this is what is happening in the market, this is the story behind it, and that is it. So that is what happened on trade, and that was it. So to drop a little hindsight, okay, I'm getting rid of this position box. Now how did I know that okay, yes, the trade was valid? Now if you look at my chart, you see where I have some blue box breakers. Okay, now a breaker is the last down close candle from a swing point. That is how I define it. Now Michael ICT, my mentor, might define it in another way, and I am not here to teach this concept. I learned ICT, but I created my own model out of ICT. Now a breaker is the last down close candle. Okay, now whenever I want to buy a position, I prefer to see price trade above the breaker. Okay, trade above the breaker and then retrace back for optimal trade entry into a fair value gap. okay, especially when there's an expansion. Now if you look at the blue line, blue box that I actually have here, you see that this is the breaker, this down close candle right here, and you see that this blue line that I have here, this one is also a breaker. So when price trades above it with this week, right here, it shifts the narrative and then trades above the breaker. So all I have to do is that wait for it to come into optimal trade entry and then buy it. That's good. But because I understand that traders who would see this as support, price has broken into the support zone, would have their entry here and would have their stop loss somewhere on the low or somewhere here. Price comes down, stop them. So if you can think outside the box, is a very good thing and advantageous. So my best to try and make this video as short as possible, and 8 months, and this is a first review in 8 months, and this is a trade. And I've actually, so for USDJPY, I'm actually thinking I want it to go higher, so I'm going to be bullish all throughout this week. And if you look at it clearly, this is a CB, a sell side inefficiency, buy side imbalance, which means there was only sell side delivered. I'm looking for price to attack that. So what am I looking at? What am I looking at for again? I'm looking at how the daily candle closed tomorrow. I'm looking at how the daily candle closed. The daily candle closed bearish, but that's not a problem for me. So I'm looking to take my position going long. So I hope you enjoyed this video. If you want to get more of my content, I don't really post much more away from social media, but I would be documenting my YouTube videos and my trades the time so you can subscribe. Please subscribe to no, if you want the knowledge, subscribe. You can subscribe, please subscribe, and you can follow me on X, formerly known Twitter. You can search Nada, okay, and you will see it. My Twitter handle will be in the description also. And thank you, and thanks for watching.